in our Melbourne studio. Chris, great to see you there today, and thank you so much for joining us on the conversation here. Now, you have been on record since late January, and I know we've spoken about this so many times. You've been calling for the market to hit 6,000 points. You've really been bullish all the way through, and it looks like we might get there.
Good afternoon, Leanne, and thank you very much for that generous introduction. I absolutely have been on record for quite some time, 8 weeks now, saying that I think we get to 6,000, and I gave a very specific date of saying that I think we get there before the end of the March quarter. We're a day and a bit away from that now, and we probably will fall short, but if we get some end of month and end of quarter window dressing, it won't be by much. And I think, if I may say so, the bigger story is that I've been bullish all the way through, even when we were down at 5,600. So it's nice for me. It's nice for my clients who I've been putting in long positions. And I guess, you know, the question is where the market heads next. I tend to fall on the side that I think we can go higher. I'm not quite ready to put a new target on the market yet. I'd like to see 6,000 print first, but I still believe in this bull run, and I think there's some more momentum in it.
What about sentiment? I mean, we know that it is high right now, but it is well off some of those high levels that we were seeing just a few weeks ago, maybe off the back of the healthcare bill failing to pass there in the US. But do you think right now it is, in terms of sentiment I'm talking about, do you think it is sort of a healthy pause?
Yeah, I think so. I mean, the thing that I've taken away from markets in general over the past 12 to 15 months is that whenever they've been met with adversity, they've just punched higher. So, you know, Brexit was supposed to derail everything. Trump winning the presidency was supposed to be another thing that was supposed to be the beginning of the end of the bull market. You know, the markets have paused. Sometimes they've pulled back sharply in and around the big events, but ultimately they've just, you know, they've kept smiling, kept on coming. So, you know, I think they do that again. I think, you know, even if it gets to 6,000, we might see a little bit of a pullback because everyone stops and thinks, oh, should we be here? I think ultimately we continue to push higher. And it's all about the growth story in the US. I've, again, consistently been on the record saying that I think it's the US market recovery or continued bull run that's going to drag our market higher. And that's what we've seen. So I'm still a firm believer.
Now, are you holding anything in this market? I think that is the key question.
No, nothing at the moment. I've actually squared away all our trading positions into the end of the quarter. But there's still a lot of stuff out there that I like. So again, going back to what I've been saying over the past 8 weeks, I've consistently said that the banks and the miners would need to rally to carry us to the 6,000 level. And that's, you know, what has happened. Anyone need only look at the four charts of the big four to see that it's really, you know, most lately been the banks that have been carrying this market. You know, and that sort of goes to Rudy's point that, you know, it's been, you know, the top end of town that's really been carrying the market. I don't think that's maybe so much of a worry, maybe as Rudy does. But it is the banks and the miners, so you know, the bottom line for me is don't shy away from them now. If you're currently holding them, I would say continue to. If you're not holding them, you should consider buying them because I think there is still room for them to move higher.
Rudy, what is your thought if you are holding the banks, given that, well, as you know, you've all been pointing out, it is the banks that have been driving the market. Would you be taking any profits at all?
It obviously depends on what your objectives are. But the share market is a form where everyone can have his say. You're either short-term focused, you're long-term focused. I mean, traditionally, if you have a long-term focus, you would like to buy the banks at much cheaper price levels because then you're not sitting on losses whenever the market corrects. But the market doesn't always give you that opportunity. And at this point in time, if you're not on the banks already, well, you're jumping on a train that has left the station a long time ago. And the banks are, you can have a conversation about whether they're expensive or fully valued, or, but one thing I think nobody will discuss here is that they're not cheap. At these levels, the banks are definitely not a bargain price. So then it becomes like, how much banks do you have in your portfolio? How much banks do you want in your portfolio? And are you trying to make a gain when the market is well into 6,000? Or are you trying to have an investment return over 5-6 years, let's say? Well, the investment return over 5-6 years would have been much better if you bought the banks 12 months ago. That's a fact that I think nobody will dispute here.
Yes. Yeah, I'm sure we would all like to sort of get into the banks at lower levels. Chris, what is your thought on the valuation of the banks right now?
We like the banks and we own all of them in our large cap portfolio. We think that the key thing for us at the moment is, generally put quite simply, that banks do better when interest rates are going up. And Long Bond is telling us that interest rates are going to increase now over the next 5 to 10 years. We've seen the banks put through out-of-cycle interest rate hikes on residential mortgages and investment property lending in recent times, and we think that will continue as we go forward from here. So certainly the banking sector does look interesting to us. The other point to note on a medium-term perspective is, as we approach the next election, which will likely be in the latter parts of next calendar year or early 2019, we're of the strong belief that Labor will be the next government that forms in Australia, and therefore it'll be interesting to see if we do get a Banking Royal Commission coming through. I'd expect that will be one of Labor's key policies that they bring to the next election. So on a medium-term view, a little bit of uncertainty, but I think over the next 1 to 2 years, earnings should come through with these higher interest rates and their competitive position being, of course, very, very strong.
All right.
And of course that means we're not too worried about high density buildings in Australia. and the downturn that's coming. Yes.
All right, we might just move away from the banks for a moment. I'm sure we can get into a political discussion, but let's just leave that to the side for the moment. Chris, bond proxy stocks. I mean, a lot of these have been pretty smashed, as we know, or were smashed. I mean, Sydney Airport, one of those that you are pretty keen on, one that you're looking at closely. Why is that?
Yeah, I remember being on the show probably about a month ago now, Leanne. I know you talked to a lot of people, so you probably don't remember it, but we were talking about revisiting some of these bond proxies that had been, we all know, belted very, very hard. And Sydney Airports was one of them. It's had a pretty good run over the last 2 weeks, moved from $6 to $6.75. And the thing for me with Sydney Airports that I always come back to is it is a profit and money-making machine. They have a monopoly. They charge ridiculous prices at the airport for everything that they sell, and they make money hand over fist. So it just looked to me at that time like, we were at the bottom of the bad news cycle in terms of, the negative sentiment towards those bond proxies. And that's now been reflected in the share price. Sydney Airport's not the only one that's recovered. You look at an APA or a Transurban, and a lot of those stocks that had been trashed, all together, caught up in that same story, have bounced and bounced rather nicely. And I think there's probably some further upside. Ultimately, you want to be a bit picky and a bit choosy, and you want to choose the better companies than the worst companies, because they're the ones that will kick on even further.
All right, fantastic. Chris, I think we'll wrap it up there, but as always, it's been great talking to you, and we'll look forward to how things play out over the next week or so. Thank you.
Thanks, Leanne. Thanks, guys. Cheers.
Chris Conway joining us there from the Australian Stock Report.